City c'est good team.
All right, we are back. Chart Talk episode, God knows what. I've been in New York for 2 weeks. I've spent a lot of money. I need to make some fucking money. So we got to get back to it. Bennett, how you doing over there?
I'm doing good.
You good?
Yeah, still grinding away.
Oh man. Well, here's the funny thing actually. So summertime trading, I try to like not be in front of the computer as much. And I was telling you this in New York, where it's like I was just trading on my laptop the past 2 weeks. So I'm not gonna be like, going crazy looking at volume and just over trading and things like that. So it literally just depended on the alerts and just bought things when they hit triggers and things like that. And I had like 85% win percentage the last like 2 weeks. Whereas if I'm here plugging away, trying to over anticipate every move, during a low volume summer month, things might be a little different. So it was a little funny to see that.
So you're saying less is more.
Less is more, especially now.
The less you do, the more you do.
So here's my 6 screens.
Now it's back to more.
Yeah, now it's back to more.
Any funny stories from your 2 weeks in the city?
Nothing I want to tell. What about you? You want to tell? I know you had some good conversations out there.
We'll get into that later. We'll
Okay.
go over some of those main points.
Okay, cool. All right, let's jump in. Market outlook.
Let's do it.
All right, market outlook. So I got the S&P chart up right now. I mean, honestly, we just broke this 324 macro area, which was the gap down from February. Nice consolidation in front of that. And then, the last couple weeks, we've just been grinding higher. We're not really overbought or anything. This is just completely healthy action right now. This is monster resistance now, this all-time high level. I wouldn't be surprised to see weakness there, but right now we've just been trending higher. So, it's tough to argue against the trend. And it's most pronounced in NASDAQ. We keep seeing, we talk about this every week, but now it didn't even give the deep pullback. The pullbacks are getting more shallow, I guess would be the term. We're not even hitting this trend line. It's just really just this 21-day simple moving average. We can't seem to close below it. We did here for a day, right back above it, closed right on it here, and now we're back up in the trend, trending higher. So trend is your friend. It's very simple.
I agree with that. So Jake, if you want, I put a couple of charts we'll go over. If you want to start with that VCR.
Oh, I got it.
All right, so this kind of goes along with your theme with the SPY. Like we're running into that prior retest. So I kind of drew out the consumer discretionary sector, which kind of is trading a little bit ahead of what I'm thinking the SPY will do. So we have the all-time highs to the left, similar with the SPY. We retested that prior high, which you mentioned would be like major resistance in the SPY, similar with the sector. And we kind of flagged a little bit, and then we later broke out, and the consumer discretionary sector is much higher. And then if you go over to the SPY, which you mentioned, we're like a month behind the VCR sector, like how it is. Like it's just getting back to that retest. So I would kind of expect it, like you mentioned, we need some resistance, but then we eventually drift higher. And again, given some of the conversation I've had recently, especially this past weekend with some of your friends in Brooklyn who all thought the world was going to end, the fact that we're back at highs leads me to believe that we too will probably see higher highs before we see any lower lows. Getting a bit more specific.
Why you always gotta be talking shit? Why you always gotta be talking shit? You're talking to your friends, those dumb motherfuckers. All right. No, I just mental notes. Taking mental notes over here.
Note of that. All right. So next we got MDY. Mid caps through 360 is an area I'm looking to add through. Energy sector VDE up through 52, and VHG for healthcare through all-time highs through that 208 area versus 200, and then lastly VNQ, which is the real estate sector, up through 82 versus 80. So a lot of little tight little spots you can pick up some positions in some of these larger markets and sectors. Those are the ones I'll keep my eye on this week. So with that, Shake, if you want, we'll jump into some of the member ideas.
Let's jumpity jump.
All right, so we got Corey McCarrick is looking at TSCO through 150.
Tractors, huh? Through 150?
Yeah, he said that earlier this morning.
I like that, yeah. No, it looks good. I mean, look, this is the perfect definition of an earnings flag right here, where, gaps up on earnings, kind of sells off on earnings, but consolidates and moves, just goes sideways. It's like, oh, it's up too much. It's up too much. Just a strong name. And, they pushed higher today. Trend is your friend. Keep it going.
Next is this FAST through all-time highs at 48.5.
Literally the same exact chart where it's like, it looks like it's up too much, but it's just that things are trending higher right now. As long as they are, keep trading them.
He had one more question, and if you want, Jake, I'll take it. He goes, it's a question about long-term accounts. He says, what kind of ratio would you follow allocating funds between individual stocks and index funds? He asked 50-50, 80-20, 100-0. So for Corey, I know you personally, I know you're very young. Most people, the 50-50, 80-20, 100-0 is based off their age. So if you're 20 years old, you'd be 80% equity, 20% bond. If you're 40 years old, you'd be 40% equity, 60% bond. But regarding the difference between individual funds and index funds, I would keep them separate. I would have one account where you strictly just have those index funds in them, and then you have one account that you just trade. It's just much easier to kind of separate those two than trying to, throw a stock into this account while you're holding everything else long term. I would just try to keep them separate and just keep it very simple. Next we have Carl. He's looking at this JNJ through 150.
Yeah, it looks amazing. Yeah, I mean, just a beautiful base right underneath an all-time high level. Johnson & Johnson should definitely come back. Love it.
Next we got ZBH through 140.
Same thing. Yeah, I like that level. This is a nice level.
And then lastly for Carl is this PII through
Polaris.
He's looking at through 104.
Yeah. I see what he's looking at specifically. All right, so you see Polaris has this huge resistance area, and now if we look at it on a more micro aspect, this earnings gap is kind of turning that resistance into support just from the gap itself. And now they're holding this gap, so I'm sure he's looking like 104 against these hundreds or something.
Yeah, versus 100.
Hey, look at us. Oh, lost my headphone. But yeah, it looks good. I like that.
All right, next we have Roy. He just started our trial, and he asked, do you guys enter trades of stocks near all-time highs like LOGI?
So the way you want to enter these stocks is the same way we've been talking about the NASDAQ all year. So we talk about the NASDAQ, and it's clearly a hyper uptrend. So it's hard to get in. So you don't want to just buy strength, buy new highs. You want to buy the pullbacks. And that's kind of what we've been keying on all year, is where we've been trying to add exposure to these names. What was it? LOGI?
LOGI.
Yeah, so same thing. It's like when you see this name pull back and things start to look scary is when you would look to get in that name, if you still believe that the uptrend is still intact. So you don't want to buy fresh highs in these type of names. You want to buy the pullbacks.
All right. Next we got Craig. He's looking at CL through 78. Colgate.
Colgate, huh?
Trying to buy some toothpaste. Actually looks, wow.
That looks great.
I know.
That looks fire. Let's check this monthly out. Oh, I think it's beautiful. Yeah, I like it. Now it's on my radar. Good shit.
Let's see what else. He's looking at his IQV to the earnings high a day.
Yeah, similar. It looks like it needs a little work, but 166-ish. Yeah, it looks good.
And then lastly is this ANET Sport Buy up through 112. Oh yeah, so you got it today, I guess. Oh no, verse 112. Sorry.
There's these lows, whatever. It's 212.
Yeah.
Yeah, no, that makes sense. You want to see a push up from this area. Came in a long way. My only reservation is that it saw like 8 straight days of selling, so I don't know how badly it wants to quickly rise back up. But again, support buy, setting up. It takes over this 220 area. Could be something.
This reminds me, if you pull up PFPT, just similar where PFPT.
Oh yeah, I see it. Yeah.
Down 10 days in a row, back into that 104, and it's held so far. But just like you said, it might need a little bit more time to kind of set up a little bit down here before it actually kind of can form a little bit of a base and work its way back higher. But similar chart. Next, we got Nicholas looking at DDOG through that 84, 85 area.
So these names have been going nuts. These like software names, and so this gap down on earnings, and they bought it right back up, and these are the earnings highs. Yeah, I like that. I don't mind that at all. It's trying to flip this little old support, new resistance level, trying to give you an entry there. But I mean, it bought up the gap down. You can't not like it. Trying to get back into the trend. Looks pretty good. 2 inside days. I like it.
And then next, he's looking at this MYOK through feeler. Yeah, MYOK.
Woo!
Through 103 and then 105.
Damn, I was looking at this gap the whole fucking time, and I forgot about this name. Yeah, I mean, look, it held this gap, so it looks like it wants to go higher from here. What do you say? Buy through this pivot high, 105 quarter, you said?
Yeah, 103 feeler and then 105.
Yeah, so buy through these highs and add through that area. Yeah, it makes sense.
All right. Let's see. Next we got Lisa Pellegrin. She's looking at ARCT through. Oh, there goes my phone. Up through 53. I believe she got in today earlier because it's up.
You said that was Lisa?
Yeah.
Hey, good shit. Yeah, no, it looks really good against these lows, or I hope she gives it to these lows. But, yeah, no, it looks good.
And then, let's see. Our other one is IIVI through 48.
Yeah, I think I know what you're saying. It looks good back up through this 48 area, but the way it closed yesterday, it looks like it's going to press lower. But we'll check it out. If it does, come back up to this 48, don't touch it before then, type thing. Let it set up. Let it do its thing. If it wants to sell off, we'll reassess then. But I see what she's looking at. It makes sense.
Even that macro, like the high 52.5, looks great. It's just like you said, it's probably got to pull back more.
Yeah. Oh wow! Will you see the monthly on that thing?
Yeah, it looks great.
Woo!
But this is one where like I feel like, and again, Lisa's a little bit newer, so I feel like sometimes when the name does come down, there's like that thought where like it's been down 3 days, like it can't go down any lower, it has to go higher, and then like it does pull back much lower than we think. And this kind of is one of those names where like it could easily come down to like the low 40s, even like high 30s, and be completely fine to set up that later move where it's like just give it a little bit more time.
And if I were looking for a day trading short setup, I'd look at this inside day as an entry, as a potential short. Because you look at the hourly, you can tell this inside day just ends up being a bear flag. You got this little support area, blah 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 blah. So it just needs time. We'll see.
Yeah. And then lastly was this BAX through 84.
One of these earnings. I love the two inside days. I love the tight consolidation. That means, the hourly is probably pretty tight. Wants to do 84, 85 area. Yeah, if you see volume in that makes sense, I would say. It's tough because it can chop around this 80 and 84 area because it's not really an area of significance because we know that most significant areas is pivot low at 78, 68. So, you just need to see big volume in that area to get involved is all I'm saying, or something.
Yeah. All right, let's see. Next, we got Natalia. Her question, she mentioned she's been seeing a lot of these support buy setups, and we talked about third time's a charm, buying up the resistance. And then we've also mentioned when it comes to support, we tend to try to avoid the more frequent a name gets a support. Like the 10th time a name gets a support, it's more likely going to break down than it's going to break higher.
Same as when we're looking for a macro breakout, the more times it tests it, we want it's finally going to go through. Same thing, just flipped.
Exactly. So she had a couple examples. If you want to pull up, you go to the email. In the first chart for Chewy, she mentioned she circled out these areas for. Again, she didn't buy these. I believe these are just like an example. Like she was looking for these support buy.
I can still say damn.
Okay, and it's the only thing like she bought every single low and just had it. So she was looking at them, and that was just she kind of had like an overall question on like that theme of when she should avoid that support buyback, when should she still have to get into them.
So here's with this Chewy one, it's you just want to see that support area hold, and this one gave you like 3 or 4 days. This last one, and it's just like green bars, and it kind of gave you the opportunity to buy on the way up. And as long as you're buying on the way up off of support, it's not just like crashing lower, or you're not taking a feeler on the way down like a falling knife. As long as you're buying on the way up off support, I would say that's really the key to the trade.
Mm-hmm. Yeah, I'm with you on that as well. I think the other thing is, again, like for someone when you're looking at support, especially in a chart like this, like it's already happened. So it's very easy to say, oh yeah, I would have bought 46, I would have sold 52, I would have bought 46, but I would have kept doing that because it's so easy in hindsight. But when you find a name that's crashing into support that first time, it's absolutely terrifying. The second time, it's a little bit easier. So to kind of take that with a grain of salt, where for right now, it's very easy to say we would have traded this Chewy perfectly, but then it's like, okay, go find the next one and actually execute it. But I think you hit it on the head with, letting it come into support. Don't try to buy into it. Let it settle for that day, and then look to buy that first burst, that low, and then you have to take the trade from there. So hopefully, Natalia, I hope that answered your question. If not, we'll dig into it a little bit deeper next week if you have like a follow-up question going off that. Next, we're going to jump into some of the social media questions. We have the first one is Sana Kachi. He asked, why did Tesla cross 1835 after the split was announced?
Because they gave them fucking retail dollars. Because people are fucking simple. That's why. It makes no fundamental change to the company when you go for a stock split, but it makes it affordable to retail investors. So retail money is piling in at these amazing valuations. It's up 30% since they announced the stock split. Unbelievable. But what I'm anticipating now is more companies to take this kind of blueprint, take this game plan, if you will. Why not? Popular companies like a Shopify. It's $1,000 now. Why not do a 5-to-1 split, make $200, 10-to-1 split, make $100, and then have the same exact thing happen? So why? It's because retail money is silly.
Could not agree more. And it's funny because in the past, typically, when the split was announced, typically the stock would kind of pull back a little bit until the split was announced, and that's usually when the retail money.
Well, what's funny is
rushed in.
we saw Netflix and Apple do it so much in the past in our trading history, and they would wait for the split, and then it would fucking get pumped. But now, I mean, I don't know how that's such a catalyst. Crazy.
Yeah, it's like
It just is.
10 $100 bills are $1,000. It's the same thing. But anyways, all right. Next we got Pink Z OSTK.
There's
No game
news on
plan.
this today. I don't know what the news is. This is like the Bitcoin stock. They moved their whole shit to Bitcoin, and then they went all the way up to $90, and then almost went bankrupt, and now they're at 118. I don't know the news though. There's some significant news behind this.
Yeah, the only thing I could see.
It's up 27% today.
I can't find anything significant for that.
Oh my
All right,
God.
so Pink Z, if you just want to blindly buy this, I'm sorry, buddy, but you're.
What was
very,
his question?
It was just the ticker. No game plan. A lot of the AMD, same thing, no game plan. Just super late. We're gonna skip through a couple of these.
Just
Other
strong
ones.
names. Wow, AMD. Wow, semiconductors are so strong. If you look at Nvidia today, just breaking out again, into their earnings report. Oh man, the AMD could honestly take this momentum flag and go higher. I'm not buying it, but it could.
Next, we got Cameron Reverts. His question was on Boeing, on the recent consolidation around this 180 area.
So here's my thing with charts like this. It's like, obviously, I'm not the biggest Boeing lover in the world, but at some point, they do their dramatic moves. They did this first one, people were making 100%. They did the second one where it went 120 to 220. Now these things just need so much consolidation. It just becomes dead money, where it's like, it's just chopping around this 40% range. Nothing significant's happening. These aren't good levels. It's not taking like the thing about Tesla, say what you want, but once it creates levels, it fucking breaks them and rips them. You'll never see that when these things are just dead money for a little bit when they consolidate. So honestly, I think these type of names are a waste of time, especially with the market we have going on right now, where things are just going vertical. I'd rather take advantage of the bullshit that's going vertical than try to do the hard dead money thing.
Next, we got Angie. He bought Merck through 84.
Nice.
Through 84.40. His stop is 83.40. A little random, but it is what it is. So he's still in it, and he's just asking.
Gave it a buck. Buy it and give it a buck. Fuck it. Here's the problem. I mean, I like the name. I like the macro resistance it's trying to break. But giving it to 83.40, I don't know. This thing's got to explode tomorrow for you to get a win here, because it's just gonna, it's just not a significant support area at all. And the way you're buying it, I really, on fifth day up or whatever this is, I wouldn't anticipate the 10% breakout, to come after that 5-day move upward. So the 83.40 stop is his problem. It's a good name, it's a good level, but that 83.40 stop makes no sense to me.
Yeah, and that's with some of these other ideas before. It's like the names that are up so much and look so easy to buy, and that's like this Merck. You said, fifth day up.
Right.
So it's like, let me get in now because it has to go higher. And it's like you're 5 days late.
Yeah.
And you have to be absolutely perfect here, or you're going to lose money. So again, if I were him, I'd have low a day, 83.99 stop. If you're wrong, you lose, 50 cents, 40 cents, 0.5%, no big deal, versus losing a random, 1.5%, with the prior low day stop. Let's see. Okay, next we got George Mendoza, CNC.
Oh, I was looking at this weekend. This thing is tight. So if it can push above this area, the 65 half area, absolutely. Really, really tight support area setting up. I like that a lot. But it's got to push through this area. Don't get in yet. Wait till it gets 65.50.
All right. Next we got Carluchis 85. He asked, how do you trade recent IPOs?
I would say, all right, so it's tough because everything's, the thing about recent IPOs is there's no history on the stocks. So, there's no support and resistance. There's no historical levels. So it's all price discovery. So the reason they're so appealing is the risk reward is great, because if you can find a tight entry, remember there's no resistance, so these stocks can run more and more. So I'm more so looking at intraday charts and hourly charts, and I'm not I'm not swing trading and hoping for 150% winner. When things pop, I'm selling some into the pop. It's much more active trading than just plain old swing trading, I would say. And I'm mapping out things using hourly levels much more than the daily chart because we don't have that history, that support and resistance from the past to look at.
I think a couple other quick little points for Carlos. I think there's like three main things. One is if you're going into an IPO, the first thing you have to game plan how much you're willing to lose. So if you have,
number one.
Say you're willing to risk $1,000 in the name, you want to make 5,000. That's the first goal. Because again, as Sheikh mentioned, there's no price discovery. You don't have a proper route. You don't really know where this thing's going to move to. So first you have to define how much you're willing to lose. And I think second and third is if you don't have like a pattern day trading account, like at the $20,000 account or whatever the minimums are these days, and you can't really read a chart, you can't really read level 2, you're basically trading with your eyes closed. And if you're trading against someone like Sheikh, who's got the 6 monitors and can read level 2 and read volume and has traded thousands of IPOs, and you're trading against him, he's going to take your money. So if you're kind of new and you're trying to get into it, you're better off just kind of sticking with things that have already been out. There's thousands of stocks. It's much easier to trade a name like Merck than trying to jump into a recent IPO where you don't really have a proper game plan. But we do have a couple of videos, and we'll have Garrett put them in the link below that Sheikh, you explained the Snapshot IPO and a few other ones in great detail. So hopefully those videos can kind of go a little bit more into that question and help him if he does want to trade them. And then lastly, for the social media questions, is Roy Morin. He had a couple names. This NIO, which is a name that I feel like every new trader has been DMing us about. It's like the bootleg.
But technically, this thing is fucking a thing of beauty. Technically, the way it gave us this pivot back in February 2019, and it was like the hugest resistance area. I don't know what the news was. I'm not following these, EV stocks so crazy. But it gaps up, and it turns that previous resistance area into support. And since then, it's just been pushing higher. So, from a technical standpoint and a sector standpoint, this thing could go higher. This thing could break 16. I don't know about valuation wise and shit, but these names haven't been trading on valuations for years now. So, just looking at the chart, it doesn't look too bad.
Yeah. Another one is this WKHS Workhorse Group. No game plan. I'm going to call it. He wants to buy up through 16 verse 14.
Is that what they said?
No. I'm just assuming.
Yeah. No. I mean that makes sense. Makes sense. Tight support buy, momentum name, holding up this level. The buyers are proving they want to hold this area. So, why not?
Next, we got this INO.
Jeez.
Yeah, I'm going to form his game plan.
This one's different because the chart's not there. The chart is not there for this one. This one's falling off. It's gapping down. Now you're just chasing the sexy name. So you see the other ones, it was all technicals, and it was, it was okay. This one is just, I guess it's this popular name is down. That's really it. And this is a vaccine play, right? And they're down over 50% from highs. I'm not buying them there. No chance.
Especially Roy, if you weren't a part of that move up to 32,
that's what I'm saying.
And you're getting it now, you are with certainty losing money.
Yeah, after all the fucking CEOs sold at fucking 28, 29, and 30.
And then this list is just, I think.
Have you heard Moderna? Moderna's corporate officers. This is like the leading vaccine play. The corporate officers almost have no stock left because they're just selling so much fucking stock between 80 and 90, ridiculous amounts. And it's just like, oh man, this is getting shady up here.
They have a lot of faith.
Oh man.
And then rounding up his basket list of just stocks that we'll never really mention on here, unless social media people ask about it, is this NKLA.
That's what I was going to talk about. The fucking, these names don't trade on technicals. This stock made fucking $37,000. They made $37,000 last quarter. Mm-hmm. That's it. They're valued at fucking $15 billion.
Yeah.
Damn, we gotta start getting TE on these valuations, son. Because shit would be sweet. But I mean, these are momentum names. They're momentum names. They'll go up crazy. They'll go down crazy. Right now, I don't see the setup in it. I think it's just too far from support. And it's just kind of in the middle of a wide range. But if you're an active trader, these things are great trading vehicles. Yeah.
I think this is a perfect example of the newer trader who's just following what everyone else has already bought. So this is a perfect example. All these names have all had huge runs in the recent past that I would assume he was not a part of any of them, and now he wants to get in now when he's just too late. And that's a recurring theme that we see over and over, where we'll get 20 DMs about NIO now, but not one person who was buying it at 4 or 5 or 6 or 7 or 8 or 9 or 10. It was everyone wanted to buy it at 16. And that's why you'll never really see us bring these names up, because our members are not looking at these flash in the pans or these kind of bubbly names. We just focus on real names that we actually use. And that's kind of the difference. But with that, we wrapped up the social media questions. We'll jump into some of the good trade, bad trade. We'll start with Natalia with this GIS, General Mills trade.
All right, I'm on it. All right. So, all right, we'll switch off on these. The entry was 60. What are these dots? That's what I don't get. Oh, the support buy was the. Oh, okay, all right. That's a little key. She gave us a key. Nice. Okay. So the entry was here. Then this is the initial stop. What are these? Oh, that's raising of the stop every time?
She keeps moving the stop up.
Oh, I think she's raising the stop a little aggressively. I'm happy it worked out. That's tough. I think the stop was raised a little aggressively. And then should I have moved my stop onto this area?
I think this is a perfect example So I think this is a perfect example going off her previous question. So she was talking about these support buyback plays, and this is a perfect example where she's finding all these support buys, and she's like, I want to buy at, for this GIS example, I want to buy 60, 60, 60, 60, and 60. But then in this example, she buys 62, and then when it does start to form another flag, or say 64 support, she's actually getting out, where with that initial question, she was wanting to buy those support areas. So this is a perfect example of the difference. When you look at a chart that already held support, it's so easy to say, yes, I would have bought 60 every single time. But then when you're actually in the name, it's much harder to actually hold to those support levels, and you end up getting pushed out. So that's my main takeaway, just going off kind of the questions we've had with her and her prior questions. This kind of nails it between, seeing names and holding support versus actually being in the name and watching it form support and then trying to be in through it. That's my main takeaway from that one. Jake, if you want, we'll jump into Fabio with his LKQ trade. I'll go over it real quick. So let me know when you have it up.
Yeah, I got it.
All right, so he bought up through 20. Yeah, little tight wedge, bought up through 26. His initial stop was 25.5, so risking about 50 cents, half a point. His target was about 29, which would be 5-1. He pretty much got that by the second or third day. He kicked into that. He kicked some more again the second time, and that's where he missed that second leg. And this is an example that I go over later with my 3M trade, where I did that a few months back, where I kicked too much too soon and missed that second leg. So this is kind of one where next time, you kick that first time, and then as it's flagging, maybe you just keep some versus at 27 to try to be in that. But again, that's a learning curve. That's something that we're all trying to evolve with and hold more of our winners. Let's see. Next, we got Tyler Kenny and Brian Chung. They're both in that CRN trade.
Oh,
the CER. CERN.
Yeah. This is a great trade. I was honestly looking at this chart over the weekend, like, fuck, this is such a sick resistance level. But to see him buy it off support, I think you should try to hold some of the looser stop. But I mean, nice job. I don't know. I'll explain it. All right, so he bought the support buy here, kicks him on the way up. Now he has the only problem is I think he just has this stop too tight for this last piece. I think you should be willing to give some a little further back, so that if it wants to break this macro move and do a move to 80, like if this stock wants to move to 80, having a 72-19 stop will not allow you to stay in the trade for that. Like just 99% of the time. If it does, great, but just probability standpoint. So my suggestion would be to leave your last piece like behind this like little ignition day, or if you can still give it here. But I mean, it's his trade. If he wants to take it up here, I just think it looks great for later.
Yeah. So the one thing is, like you mentioned, he has he kicked a third, he has 2/3 left. So like I'm in the camp, like I'm okay with that. Again, I don't like the 72-19 stop. I'd rather be
71.89. Yeah.
Yeah, but I would have maybe a third there, and then be willing to give that third back, and then you can still lock some of it if it just does want to play in this range.
Oh yeah.
And then you still have some to be light with for that bigger move.
Yeah. I like that.
And then for Brian Trung, so this is now he traded a little bit differently. So for Brian Trung is a little bit more of kind of like how I trade it, where I just will trade it, I'll buy it once and sell it once. So he bought it up through 70. He moved his stop up to 71.89. Good job. But he has his full position still.
Cool.
So he's, so again, similar, same name, same setup, but Tyler kicked some, has a tighter stop. Brian has the full position, same stop, or a better stop actually. So Tyler moved that stop below the figure, maybe a tier the stop, and then same for Brian. Maybe you you have 2/3 versus that 71.89 and keep a third verse back to break even for that bigger move. I think that that might be shaking my consensus on that name. And then lastly, we got Roy. Again, he just started in our 90-day trial with us. He got this LOGI. He bought up through 75.
Oh no, he's not gonna like my earlier. This is one we were talking about earlier, where it's like I was like, it's tough to buy strength in these names because you want to buy the pullback because the true support is this like 21-day simple moving average. That'd be the only suggestion I have for him.
Yeah, but yeah, so for him he bought.
But that takes
75.
time, that's not an early guide lesson.
Yeah, of course. But again, the one good thing, he bought 75.06. So again, he bought up above the figure. I like, that's definitely a great thing. That's one of the things that we teach. Stop 73.42. Seems a little random. I got below prior lower day. Roy, if I were you, I'd probably up that just to the lower day, especially if you get some follow through tomorrow. His target's 83, so more than 5-1 if he does up it. So it does wrap up the member good trade, bad trade. Sheikh, do you want to go over some of yours and I'll go into mine?
Yeah. Let me go over a bunch real quick. All right, we'll start. This is I don't know. Is this trade of the week a week ago, 2 weeks ago? This PGM one? Oh, I didn't make a trade of the week, so I was too scared. But this is the name that like fucked us all. In this area, whenever it was, and it finally broke down. We were over trading it, kind of tick watching it, and then this time after earnings, here's earnings day because it's the inside day. So then we just had that 28 trigger. Sold a bunch into 30. I'm still just kind of holding some. I have my stop mostly below this day. I'm giving probably my last piece to this 26.50 area. That's my original stop. That one looks good. This SPSC, I bought it this day. Kind of came back. I de-risked the second day, but I think this looks so good. This is one of my favorites going forward. Just an upper level bull flag. Looks really nice. WSM. This was trade of the week. So we bought, this area, this 87.50 area. I sold a bunch here. What was that? 95 area. I was kind of de-risking for the weekend. I still got some though. Looks amazing. Looks fucking amazing. Nike, another good one. This one was trade of the week. All right. So then we bought 98.50 versus 96.50 here. I took a bunch off 4 to 5-1 area. I took most off. I took like 4/5 off when I got to 5-1. So I'm just holding the last fifth or so of that one. CHRW, nice little earnings flag. I've been trading around the core here. So what do we love? We love when earnings names gap up and they hold the gap. So I bought it here on this day. I had a little too much risk on. Took some off here, trading around a core, and now I'm kind of looking for the re-add against the support level. Could come tomorrow. I'm going to keep an eye on it. Some good stuff. I'm sitting in this CHKP with Heaven. My stop's below is 122.50 there. This is the earnings flag like we were seeing. Gaps up too much on earnings, doesn't really go anywhere, it goes sideways. So just kind of playing that one out. Looks like it's going to fail, but we'll see. And then I'm in this Amazon a little bit. I've been traded like crazy last week, but I just bought a feeler today. I love this one going forward. We'll talk about that one later. And then this fucking Pinterest today. This is like, these are the most debilitating losses. You can't see my screen. It's fucking hilarious, though. I like this trade for about 6 seconds. You buy through the figure, and what I'm buying off support here. Earnings name, we love it holding the gap, gives us a support level. It flagged all day, off support. Bought it on the way up off support. Sometimes this just happens. It just fucking, sellers were too strong, and it just flushed down. And it recovered. I didn't give it enough room because it so quickly told me I was wrong. So I'm still watching this one. I think it still looks really good. My only problem is I don't know if it's still too overbought or what. The more consolidation, the better here. But that's it. What you got for me?
Let's see. Yeah, no, that pin's like the macro chart for pins.
Yeah. The pins,
third time out of the logo looks great.
Yeah, the monthly. It's just going after this 36.
Yeah. So again, I drew out a lot of the charts. So you can go to the bottom of the email. You can start. First one is this DRI. Bought up through, what was it? 79. Yeah, bought it through like 78.5. Again, simple, just trailed it. Got something today. Little gain, 4%. Nothing too crazy. Nothing loose sleep over. This little swing, buying up off support. Failed trade was this HRC. This was one where we started to see, and maybe for Natalia this might be a relevant example. It got pretty beat up on earnings, but it held this like 93 area, which you can see was holding earlier in June. So I started to see it, starting to form a base, and I got some up through 96, and I was looking to add up through 98. And this was also when our buddy Chris was going to, join this trade with me as well. Held 98 to a T, so we didn't get filled in the ad. And at that point, when it started to come back down, I didn't want to give it verse at 93. I didn't want to give this name, $3, $4, $5 when it didn't show that it was ready at that point. So once I saw it that day, run up to 98 and then come right back, I moved this out to break even. I lost nothing, which I'm completely okay with. And now it's breaking, it broke that support. So it's kind of off my radar for now, but it was a shot worth taking. It just didn't work. Next, we have this JPM. I drew out this level. We've been watching this 100 area, this 104 for some time, and we spotted a little tight entry verse at 96. We bought up through 98, verse 96. It's about $2 risk, and we got a decent little 3-day move. I was looking, what the game plan was to aim for that 116 area. It just didn't have the momentum to get up there. And I was just trailing the stop, and I ended up getting out like 104 for about a 6% gain. And this is where, as it's coming back down into this range it's been in, I can easily buy back up again through 100 in time and take that trade again. So again, these couple quick little swings. Next, we have this NDC, which we got in today. We had one of the alpha alerts that we wanted to buy up through 44.5, and to be in or prepared for that 46 breakout. I got there much quicker than most of us expected, but again, looks great for now. It's break even stop verse 44. Originally, we were going to give it verse 42. That one's still in motion. This triple M is similar to the CRN trade that we were going over before. A lot of guys, I know Mo was in some of these. Well, we bought up to 152 versus 148. Easy support buyback. Again, for Natalia, we can see how it came into support a couple of times. And as it got up into resistance, or the upper end of its range, which is at 168, this is kind of like CRN breaking out where it's at now. Now, for me, I was just kind of trailing this. I took most of mine off versus 164, but even now it's still technically flagging. It still looks fine, but I still have a third that I'm getting back to break even. So if it does want to break 168, I'll be in light enough for the rest of the move. But if not, and it wants to continue to trade in this range, which it's been doing for the last few months, I locked some money in the top of the range, and I can look to get back into it. And then along with Nike, again, Shake, I bought a little bit higher than you did. I believe you bought up to like 97, 98. I bought up to 100, and then it just got stopped out for about a 6% gain. And then lastly is this UHT. We saw, again, the support buyback, technically almost like a bear flag, but I bought up through that 70, moved the stock to break even, had about a 10% run up, just trailing the stop, got out for about an 8% gain, and similar to that JPN, it's back to my pricing now. So again, it'll more likely break back down through 70. Maybe it breaks down below 65, who knows, but I will look to take it back up through 70 in time. Not tomorrow, but maybe in a week or two if it settles out and wants to make another push back up through that level. So those were some of the names that I've been trading recently. That wraps up my good trade, bad trade.
Top ideas?
Yeah. You want to start?
Oh, lost the headphone. All right, I'm back. What'd you say?
So you want to start off with your top ideas?
Sure, I'll start us off. All right, start us off. Pins is on the list, honestly. I like this pins a lot, just the macro level. Fucked it up today, but we'll see. We'll reassess. BLL, Ball Court. Just a beautiful, beautiful level here. Nice little earnings flag. Love when an earnings flag is taking out a macro resistance level. Just another layer of probability there. And then my buddy Amazon, I think this one is just going to fucking go vertical soon. They had such massive earnings, and they've just been the market leader. So there's no reason for them not to. It's like, fuck it, just keep taking the same trade over and over again. This Visa is shaping up. This was trade of the week last week, and it just kind of consolidated around this area. This one looks really fucking good for tomorrow. I'm going to be looking at the 250 area, 200-ish. Got to give that to the proper room, but that one should be a good macro breakout. And then lastly is Twitter. This is trade of the week this week. This 38.30 area, you can't really tell on the naked eye, but this thing is kind of wedging a little bit. Very tight consolidation. So it's just got to come to a culmination. So we're buying this we're buying this through this resistance of the wedge and kind of giving it to lows. 36.50 or 37 stop look like the two places to be at this point. Probably use 36.50. But yeah, that's mostly it. I mean, there's a lot more out there, but give the freebies, YouTube freebies.
Yeah, I actually got into Visa today.
What?
I got ticked in Visa through that 200.
Oh, you
today.
did?
Yeah.
Nice.
So the three that I'm looking at, and I have the charts again in the email. First one is the CVS through 66.
Okay.
Verse 64, it's a little base forming. Next up is SBAC through 310, verse 300. And
Nice. I like that one a lot.
yeah, this one is a lot better than the CVS because flag and all time
This
highs.
one's more ready.
This is like much better, but again, I'm just trying to find some other ideas out there. CVS, SBAC, and then lastly this Charles Schwab, SCHW through 36, similar to the CVS.
Little bottom bouncer.
Yeah, a little sport buyback, not really sport buyback, but a little base breakout to 36, verse 34.
I like
so those are the three. And again, I like the VC a lot as well, but a little biased because I did get them today.
All right, cool.
All right, so with that, I think we jump into book of the week.
All right, All right, Bennett, I got some terrible news.
No book.
2 weeks in New York. My life is far from gotten together. I have no book for you, but I'm hoping you're going to pick up slack today. You got some good books. You got some good lessons. Give the people what they want.
You think I wouldn't have a book?
I don't know.
So,
I don't know.
So I'm reading. I just finished The Biggest Bluff. Mm-hmm. This is by Maria Kononova. But anyways, she was a psychiatrist. You know, super smart, but never gambled, never played any card games her entire life. She meets one of the most famous poker players. Again, I don't know poker that well, so I don't know like the names of the players. But she meets this super wealthy guy who made like $30 million playing poker, nice. And she wants him to teach her how to play. And she wants to use her background in psychology to see if she can make it as a professional poker player. And she gives herself like this 1 year time frame to make it into the World Series of Poker and not win it, but just make money in the tournament. So she goes through this entire year for training. Through when you play with a game planner, you play based off the statistics of how the cards can play out. Plus reading how people bluff. Long story short, she ends up winning, I think it's like $100,000 her first year, but for the first 9 months she was garbage, and then she kind of gets in her rhythm and grinds out. And I think she still plays full time now, but there's a lot of parallels to how people gamble and then how people trade.
Yeah.
And the one most relevant example is when she goes to Macau. Again, we were talking about how Macau recently opened in the city. We're talking about this past weekend. She said that's like the gambling mecca of the world, which is everyone kind of knows that. But actually being there is a completely different experience compared to Las Vegas, where there it's like everyone believes in like the Lucky Charms and everyone's wearing red and everyone believes in the number 7, so on and so forth. And she said just how degenerate everyone was there, just strictly just gambling, just very loose, really no.
In Macau, they were degenerate. Oh,
just like the further she's like I've never seen anything more, degenerate than that in my entire life, and she was almost like happy to get back to Vegas. But you can see a lot of parallels with how for her she had a system. She had a certain amount of money she was willing to buy into the tournament. She wouldn't rebuy. She played certain hands. She always folded certain hands. So she had like a system in place, and it just took time for that to work for her. And it took about a year for losing before she finally caught like her big break. Nice. So it was definitely a very interesting read. I actually downloaded a Texas Hold'em app and started like playing. Obviously a free one, so it didn't matter.
That's where it starts. That's where it starts. See if it tracks someday.
No, that's not gonna happen. But definitely it's a fun game. I'm not gonna lie. I played it.
Look at you, changing with the times.
No, but I did delete the app off my phone after playing for like 20 minutes. I'm like, all right, I had my fun, I'm done. But interesting read.
That's funny.
Yeah. So when I saw you guys bring the cards out, I'm like, oh, do we play Texas Hold'em tonight or
Texas Hold'em?
But we obviously did.
Trying to have a couple beers, bro.
Yeah. So yeah, that's all I got.
All right, cool. That was good. You made it up for mine, I'd say. My lack. I'll be back. I'm gonna come so strong next week. You'll see. All right.
All right, guys. We'll see you guys next week.
Next week.